Hey traders and investors, it's Serge Berger here. Today I want to keep it very simple and just go through a couple of very important characteristics of the so-called doji candles and what it tells us, not so much in terms of a price action point of view, but through the lens of investor psychology or sort of the buyer-seller imbalance. So if we look at the S&P, obviously we had this very sharp V-shaped reversal here with a drop in the second half of September, early October, and then the very sharp rebound in the second half of October and through the first part of November so far. However, what we're seeing now, and this is something we haven't seen in the S&P for a long time, is a complete sideways move, and I mean literally sideways. Like last week we had Tuesday, Wednesday, Thursday, Friday, complete unchanged days. Today, so far as of this recording here, Monday, November 17th, we're up like 10 basis points. Day isn't over, so we'll see what happens. But from a through a lens of investor psychology, what this means is that the buyers and sellers are somewhat in balance and somewhat indecisive. Okay, I would argue that sellers at this point are probably scared to short this market. Buyers realize we've had a very sharp rally, so they're somewhat more hesitant of buying this market higher, also in grand scale. So you have a lot of sort of algorithmic based stuff that's happening to keep the market in check here, as this is also being recognized by the algos. The dips are getting bought in a very tight range. The rallies are getting sold in a very tight range. At some point, this type of a move tends to resolve in a more volatile fashion than a lot of other type of consolidation phases. So the more of these types of doji sideways candles, in other words, the doji candles where the open and the close print are almost the same on any given day, the more we have those, the more we are probably setting ourselves up for a pretty good directional move. Of course, the direction in which we'll go ultimately is difficult to tell because we just don't know yet. It could be to the upside. It quite frankly probably should be to the downside, at least for a consolidation point before we have a better move, a chance of moving higher again, but that's for the market to decide. So just keep in mind that the past, say, 5 trading days or so have pretty much just caused the market to go completely sideways, and at some point that type of price action will tend to resolve in a directional fashion in a more meaningful way. I hope this makes sense, guys. As always, if you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.